session on emerging economies. So an emerging economy is an economy of a developing nation that is becoming more integrated with global markets. Examples of emerging economies could be China, India, Brazil, Mexico, and Turkey. And a key feature to think about with emerging economies is that it possibly, from a business's point of view, looking to trade with that emerging economy could lead to higher returns, but it comes with higher risks, of which we'll get into more detail later. But firstly, let's think about the opportunities of an emerging economy and the opportunities presented to, for instance, a UK business looking to expand into that emerging economy. Well, the first thing is if the UK business, its market is saturated, as in the product the business sells, everybody already owns it. Therefore, having an emerging economy to expand into, perhaps export into or move into, might allow that business to increase the size of its market. And that could lead to more sales. Secondly, if there's too much competition in the UK for that UK business, they might look to trade elsewhere, and that might offer them more opportunity to increase sales. It could be in the UK, the product itself is regarded as being in the decline stage of the product life cycle. And if they look at the emerging economy, they might see the same product actually is in an earlier stage of the product life cycle and therefore generates possibilities of higher growth in the future. The next thing is that if you are expanding into another economy, an emerging economy, well, that will lead to higher outputs. Higher outputs could generate economies of scale being purchasing, managerial, technical, and that might lead to a lower ACPU, average cost per unit. Cheaper to make one thing. And if it's cheaper to make one thing, it might allow the business to bring down prices. And if the price elasticity of demand of that particular product is elastic, well, that could lead to larger revenues. The next thing is by expanding into another economy, an emerging economy, it might allow the business to spread its risk, because maybe there is a recession in the UK, but there's not a recession in another emerging economy, such as China. And therefore, it allows the business to still make profits in that particular economy, because they're trading in multiple economies. They're not putting all their eggs in one basket. Obviously, if it's a recession, it would indicate the income elasticity of demand of the product is positive. You could flip it the other way for an inferior good, with a negative elasticity of demand, income elasticity of demand rather. Number 6 is going into that emerging economy could lead to lower production costs. Maybe it's cheaper to get raw materials or supplies or labour costs in that country. Maybe they have different labour legislation in terms of minimum wages. Also, it might offer the opportunity for the business to offshore into that emerging economy, and that might help their sales or their production. Another thing to think about is less regulation. There could be less regulation in that particular emerging economy versus the UK, and that might help the business in terms of their having less bureaucracy. And number 8 is in the emerging economy, well, it might be growing fast, and that's going to exacerbate all of these reasons and maybe lead to higher sales and therefore higher revenues and higher profits. Now let's think on the other side in terms of the risks. So the risks of entering an emerging economy, well, there might already be competition in that emerging economy. So therefore, if that is the case, because that competition might not be domestic in that emerging economy, it could be from other countries. It could be global competition that are looking to compete in, for instance, China or India. So therefore, it's very important to grow your brand awareness and grow that brand awareness amongst the likely growing middle class within the emerging economy. Point number 2 is perhaps we were thinking earlier on about it's fast growing, but it's still worth making a point that it's likely that the emerging economy, which is a developing nation, might have a lower average income versus a developed economy. So therefore, there's less purchasing power from those consumers. So it might be important that you are keeping those prices down, as we talked about here earlier on. Number 3 is you may need to adapt your product. If you're thinking AQA, then you'll be thinking about Bartlett and Goschel and the transnational strategy or the multi-domestic strategy, more responsiveness to the particular market. If you're thinking Edexcel, then it might be the polycentric approach. Either way, whichever approach and whichever exam board you're on, you're losing economies of scale because you're adjusting your product to tailor the local needs of that market. And that means you will lose your economies of scale. That might lead to being less able to bring down your average cost per unit, less able to bring down your prices, and so forth. So it's an important point to think about there. And you can play that off against the point about economies of scale, number 4 over there. Now, number 4 on the risk side is, well, you're moving into an emerging economy. Could mean there's different cultures. Different cultures have different tastes, different languages, different unintended meanings when you translate things. And you have to be really careful about that because it might lead to an inappropriate translation. And that will obviously be really damaging to your brand if you haven't been on top of that and thought that through carefully. So there's risks that are posed and they must be managed. Number 5, poor infrastructure. If you're looking to offshore, looking to do production in that country, it might lead to the fact that you're realising that emerging economy, the infrastructure is not as good as your own economy, and that's going to present you problems, maybe transport problems. Maybe that will lead to problems in terms of logistics and your reliability. And number 6 is, well, it might be that in the emerging economy, there is an unstable political system, and that presents huge risks to your business because you are looking to expand into that emerging economy. So I hope that helps on emerging economies. See you in the next sesh.